Hi guys, this is a video by WeMakeMints.com. This video is being filmed in August 2013, and basically what we want to talk about quickly is the price of gold and gold investment. There's lots of websites popping up talking about you must buy gold, the dollar's going to crash, protect yourself from what the government's doing. What we would say is that they're only giving you part of the story. Now the Federal Reserve, which is the main bank in America, they've got some of the best economists in the world working for them. Do you really think that they're going to print the dollar into a state where it's not worth the paper it's written on and America's going to be third world status? If you believe that, then you shouldn't really be worrying about anything else, because don't worry about it. The price of gold at the time of this video being filmed is just over $1,300 per ounce. We want to get on camera and say we do not recommend that you go buying gold bullion at that price, and there is a reason for that. Basically what we're going to quickly go through is interest rates, but first we want to say since 2001-ish and certainly since the credit crunch 2007-2008, the world has created a perfect environment for gold prices to be high, because currencies are so low. Basically because of the debt and everything else, countries have been printing off money, which has led to high inflation. You may notice that the price of everything recently has gone up. Well, not recently, over the last couple of years, and that's because they keep printing money. The prices are rising, but it's not because things are becoming more valuable. The currency, like the pounds that you're using, or the dollars if you're in America that you're using to buy them, are actually going down in value, so it takes more of them to buy the same thing. And that's why gold's gone up. It now takes more of these devalued pounds or dollars to buy the same ounce of gold. Now, we have created a perfect environment for gold to be high. What happens when that perfect environment changes? Gold's going to come down. Gold won't stay high because people don't need gold to be high anymore. And basically what we think is going to be a catalyst for that is interest rates. Interest rates are low at the moment. They have been very low. And what that does is it stimulates economies, but it creates inflation. And how it does that is, let's talk about ISAs, for example. My ISA might pay me 0.25% or 0.5%. I don't want to keep thousands of pounds in my ISA if it's earning me 30 quid a year. So what do? I go out and spend it. I might buy a new car. So that car business earns more money. They can now employ more people because more people are taking money out of their ISAs and buying cars. So they employ more people. What happens when more people are employed? There's less people claiming benefits, which costs the government money, and they're now paying income tax, which the government can tax. And then, because they're earning more, they're spending more in other small businesses. If these businesses like Tesco are making record profits, they're making record tax payments to the government. So it stimulates the economy. What it also does is it puts more money into circulation, because less money is being stashed under mattresses or in ISAs, it's being spent. So there's loads of money in circulation being spent from one business to the other. If they raise interest rates, what will happen? If my ISAs now pay me 4, maybe 5%, I'm going to take that money and put it in my ISA because I want to earn a couple of £100 on my savings a year. So I stop spending as much money because I'm trying to save it. And basically the price of everything will come down because it's supply and demand. If less people are spending money because they're now starting to save it, then businesses have to bring their prices down. And currency strengthens. Currency at the moment is very cheap. It's low in value, which pushes the price of everything else up. Whereas if interest rates go up, it does the opposite. Currency starts to come up versus goods, and that will affect the price of gold. Interest rates going up will hurt gold. Interest rates going up will not be good for gold. And we believe, as we said, gold is just over $1,300 per ounce. We believe that gold will go under $1,000 per ounce at one stage, and interest rates are not the only thing that's going to affect the price of gold. But what does affect the price of gold is the strength of currencies, and there's all sorts of things that affect the strength of currencies. What a good investor will do is they will buy something undervalued, they will hold until it's overvalued, they will then sell and buy the next thing that's undervalued, and they will keep alternating. We gave this some thought, and the stock market is at all-time highs now. The bond market is very high, the price of gold and silver are very high. So how can everything be high at the same time? Where is the undervalued market? What should we be buying at the moment? Well, let's answer the question, how can that be? How can everything be high at the same time? Because currency is so low. That is why, because if currency is so low, it takes so many pounds to buy a share of Tesco now, for example, or something. So, do you want to know, out of interest, probably the best undervalued investment at the moment, if you can call it investment, let's call it an asset. The most undervalued asset at the moment? We'll show you. Don't know if the camera can pick up on this. US dollars. Nothing out there is more undervalued than US dollars. And obviously pound sterling as well. This is what we're doing with our money. What we believe is that gold is high at the moment and dollars are low. What will happen is that will reverse. Dollars will go up when the interest rate goes up, and gold will come back down, and everyone will be thinking, why is this gold not worth what it should be? And they will panic selling, and no one will want to touch gold again, because this is what happens. This is how human minds work. They want to buy a hot investment that's been going up and up and up. There was a property boom in the UK not that long ago. House prices were going up and up and up, so people were paying more and more, because if something's gone up, we think it's going to go up even more. And this is why we get what's called bubbles. And this is what's going to happen with gold, because as we said, by the time you're reading about it in these magazines, it's already too late. But there's still people out there today putting a lot of their wealth into gold, and just wish that they would understand some of the bits that we're talking about. But anyway, we do appreciate your time, and thank you for listening.